Thank you for joining us on GlobalScience. From Hong Kong, Paul Khan, Managing Director and Head of the Hong Kong office for Amherst, Pierpont International, will share his views on securitized products and mortgage-backed securities. An MIT graduate, Paul has over 25 years' experience in issuance, distribution, structuring, trading, and execution across the capital structure. Paul, thank you so much for joining us.
Hi, Bruce. Thanks for having me on.
Thank you. Can you tell our viewers about Amherst Pierpont International?
Sure. So Amherst started as an employee partnership with a group out of Credit Suisse First Boston in the early 90s to trade MBS, mortgage-backed securities. After the global financial crisis, we picked up a large group of senior and professional people from across the street, including people from RBS, Lehman, Bear, all the way to Citi, JP, and Goldman Sachs, such that we became one of the largest and most experienced sales forces specializing in securitized products. In 2014, we merged with another group called Pierpont, which was a group out of JP Morgan led by Mark Werner, who was the vice chair. We merged them together to be Amherst Pierpont. We are trading in rates, repo, credit, EM.
A lot of people are talking about the timing of a possible tapering. Do you think that tapering is possible within this year amid the spread of the Delta variant?
I actually do believe that it's possible. I think there's a great desire for rates to increase, but there definitely is a desire by many people for rates to move up. And the question, of course, is going to be how fast it moves up and how well is the Fed able to telegraph what their intentions are so that the move can be measured and not sudden.
The July FOMC meeting minutes noted the possibility of tapering, which resulted in funds from emerging markets moving to developed markets. Do you think emerging markets are still attractive investments?
COVID has a much greater effect in the developing markets. A lot of people have criticized the developing markets for not doing a better job at distributing vaccines to the less developed countries. I don't know if this would be an entry point for me in EM, because the effects of the virus are exponential. So I'm not sure if now is the right timing for that.
Okay. Now, what is your outlook on the global economy? If interest rates go up, how does that affect your product and business?
Actually, I'm a bond guy, and generally when rates go up, bond prices go down, which is generally a bad thing. But actually, in this case, rates are so low and spreads are so compressed that everyone, investors, are looking for higher rates to help them manage the fixed liabilities that they have. And so I think if rates increase in a measured pace, I think that would actually, a lot of investors would really welcome that. I'm hoping that rates can continue to move up in a measured, in a relatively reasonable and measured pace.
Now, Paul, with the U.S. leaving Afghanistan, how will that affect the financial markets?
And it's hard to know what the equilibrium will be when U.S. and Western forces leave. So I think I don't think this is going to be an effect you're going to see in the next week or two. This is going to be an effect we're going to see in the next 6 to 12 months, in terms of what the drawdown in Afghanistan actually means for the global economy.
The U.S. real estate market has risen quite a bit over the past 2 years. Is U.S. real estate a good asset class to invest in?
Real estate assets, for a number of reasons, are very attractive in terms of real assets, income producing, all of that, and able to get leverage on them, for example. But it's also very dependent on location. And so depending on the location, I think there are definitely areas that, will look very overheated and unsustainable. And there are other areas that you may think, well, these have structural and fundamental reasons why they should continue to be good investments. I think in some locations, in some regions, there will continue to be good and attractive investment opportunities in real estate. And I think, with fears of inflation, real assets are, a good option.
The financial markets are quite volatile now. What should investors worry about?
Any complications with COVID, with global security, can see some of these spreads blow out. Some of what our investors are doing are looking at residential mortgage backs, securities, MBS, especially those guaranteed by the US government, like Ginnie Mae, or with the implied guarantee, which is Fannie and Freddie Mac, which are government-sponsored entities. There you're looking at, getting spreads of 100 basis points off treasuries for basically, government credit. A lot of Asian banks have been looking at short MBS to lock in, very decent spreads.
Now, finally, can you recommend any stocks to our viewers today?
Personally, I would be looking more to indices where you have diversification and you also have liquidity, and it's easier in some ways to monetize your view. And so I would be looking at big ETFs like Spider's SPY, one of the first and largest ETFs for the S&P 500. You can look at DIA, which is following the Dow index. And if you're negative on the market, you could look at negative and negative levered ETFs like DOG or SDOW, which are 1-time and 3-time negative levered ETFs. So those are some of the ways I think it's easy for normal investors to be able to feel if they're watching it every day.
Paul Kahn, Managing Director and Head of Amherst Pierpont International in Hong Kong. Thank you so much for being with us today and sharing your views and insights on the market.
Thanks, Bruce. Thank you.
Thank you. Paul Kahn is making a few ETF recommendations. For those who are positive on the markets, he recommends Spider, SPY, and DIA. If you're somewhat negative on the market, you may consider looking at DOG and SDOW. Thank you so much for being with us today, and until we meet next week, please be safe and healthy.